Good morning, good morning. Thank you guys so much for tuning into today's live stream. It is June 27th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. We have core PCE price index month over month. Here came out at a whopping 20 basis points. Let's see, personal income, personal spending. Personal income was negative 40 basis points. Personal spending was a negative 10 basis points. I think this is probably the most important news release here is the core PCI or core PCE. Sorry, this is an inflation indicator. The bigger the number, the higher the inflation. And yeah, let's see here. So coming into the technicals here for today, this was the daily candle from yesterday. And with the way that we closed here on this daily candle, you can assume that the daily high is the draw of liquidity. That's kind of where I would like to see prices is I want to see prices take out the daily high, which we did end up doing coming into the London session, I believe. Not exactly too sure, but I do believe that we did take out. Oh, it was actually the Asian session whenever we took out previous day high. Move this. Right. And yeah, so because we took out previous day high already coming into the Asian session, for me today, I would like to utilize for me, I would like to utilize the intraday time frames, such as the 4 hour, the 6 hour, the 6 hour, the 8 hour, or the 10 hour. So, yeah, coming into the morning, probably gonna utilize the 8 hour time frame and the 4 hour time frame, depending on how we close on those two specific time frames. That will give me a morning objective. So for right now, we have about 25 minutes or so until these two time frames closes, right? Once this 4 hour candle closes, you can apply the same concept as what I did with the daily time frame, such as if this 4 hour candle closes bearish, if the candle's closure is close to the 4 hour low, then I would be bearish. If the 4 hour closure is closer to the 4 hour high, then I'll be bullish. That all depends on how we close on the 4 hour time frame and 8 hour time frame. And that's kind of my thought process here coming into today. Let's see. Yeah, I don't really have much, I guess, of a bias for right now. I am anticipating, however, that this weekly time frame, this weekly candle is about to close. Yeah? Okay. Yeah. And yeah, so coming into today, I'm also watching where we close here on this weekly candle. So candles, there's always going to be an open, a low, a high, and notice we do not continuously expand higher here. At some point, the candle is going to have to close, and the closure tends to be like a little retracement back into the range. Something like this, right? And ICT taught this concept of TGIF, where prices is likely going to close within the 0.2 to 0.3 of the dealing range. So somewhere in this blue box is where you would like to see prices close, right? That's the ideal. I want to say ideal, but that's typically where candles closes. And yeah, so that's something I am watching for today. So if we do end up getting this, like, move lower, it makes sense for us to do so. Yeah, so that's kind of what I have coming into today. Like I said, utilizing the intraday time frames, watching for a possible retracement, and yeah, let's take a look at the 2-day time frame. Two-day time frame is about to close, looking like we're going to close bullish here. Daily time frame here as well. And all right, so like I said, just going to be patient coming into the morning session today. Going to wait until the 4-hour candle closes and the 8-hour candle closes for a morning objective. And I think for now, I'll go over some of the pros and cons. And yeah. Hopefully you guys have kind of grasped the idea of a TGIF setup. Typically, you're going to watch for TGIF whenever a candle is near its closure, right? So for a weekly candle closes on Friday. Today is Friday, which is why I'm watching closely for TGIF. But you can apply this to the daily time frame. You can apply this to the monthly time frame. You can apply this to, you can apply this to whatever time frame that you are comfortable with using it on. Even on the monthly time frame here as well. The monthly candle, June's candle, is about to close in about, like, it's gonna close today, right? Or actually no, it's gonna close on here on Monday, so watch closely for that. But with that, not really much else to watch for now, to be honest. At least on the weekly and the monthly time frame. I'm still watching closely on how we will close on the 4-hour candle and the 8-hour candle for a intraday bias. Watching closely on how we close here on the 4-hour and on the 8-hour. Interesting. Alright, so here's the pros and cons from last week, carrying it over onto this week. So the first thing that I do want to mention is, or I guess the first pro here, is to be consistent. Remain consistent with with my approach. I have to always require a higher time frame objective. Higher time frame objective is essentially the bigger reason for why prices should be continuing higher or lower. A model, how are you going to align yourself with the higher time frame draw of liquidity? If we're targeting a weekly high, how will you position yourself on the lower time frames to be aligned with that higher time frame order flow? Your entry pattern is your entry mechanism, right? It's how are you going to participate here? So it is, for me, always going to be a fair value gap. ICT has introduced a lot of concepts such as order blocks, breaker blocks, mitigation blocks. There's a lot of entry patterns that he has introduced. I would recommend using and sticking to one. For me, the fair value gap is always going to be my preferred entry pattern of choice. And so those are the 3 things that I look for before I enter a trade, a setup always. So that's the first pro, is to be consistent. Second, to actually make sure that the fair value gap that I'm using can be treated as a entry pattern. I think it's a little bit easier for me to show you what I mean by this, but here. So this really big blue box here would be considered a fair value gap, right? It's created with 3 candles. Fair value gaps are always created with 3 candles. And how to know when a fair value gap is going to be, or let me rephrase this. You're not going to know every single time when a fair value gap will be treated as a breakaway gap, but to make it objectively easier, the best way that you can approach this is the 3rd candle's closing price above the 2nd candle's high. And this is for bullish fair value gaps. These are for busies. It would be the opposite for SIBIs, right? And the idea is, this is the first candle, this is the 2nd candle, and this is the 3rd candle. Like I said, it takes 3 candles to create a fair value gap, and the fair value gap is kind of like an inefficiency in prices where there's been just a large, I would say, displacement away from the first candle's high. And notice how this fair value gap is created by this first candle's high and the 3rd candle's low, right? Notice how those highs and lows, they don't touch each other, which creates that inefficiency. And so to understand how and when to treat a fair value gap as a breakaway gap, like I said, the 2nd candle's high, which is that purple line, the 2nd candle's high is here, where that green line is. And let's take a look at the 3rd candle's closing price. If the 3rd candle's closing price is above the green line, then you have to treat this fair value gap as a breakaway gap, right? And so here, this is where we closed on the 3rd candle. So notice how that orange line, the 3rd candle's closing price, is above the green line. That to me is objective enough to know when a gap will be treated as a breakaway gap. Sometimes there's going to be situations where we could, but this way there's this, with the way that I'm approaching it right now, it makes it a lot more objective, right? It's not saying that because this happened, there's no way we won't retrace back into here or rebalance into here. It's just the possibility, the probability of us rebalancing into the fair value gap is lower. So that's the second pro here, is understanding when to treat a fair value gap as a entry pattern, when to treat it as a breakaway gap. Third pro here is knowing when to pivot. I did show you guys pivoting is essentially utilizing different time frames, right? Coming into today, like I stated, the daily candle, its objective has been completed. The fact that we took out the daily high already is more than enough for me to really anticipate on the daily time frame. That's all I'm really looking for on the daily candle. Once we complete that objective, I can no longer utilize it. So I have to pivot onto the intraday time frames, utilizing every single time frame to my advantage. And the last thing here is watching really closely between the relationship of ES and NQ. I have to watch for any signs of SMT, right? For right now, it doesn't look like we are going to do so, right? But watching for SMT is pretty important. It shows you where there's been manipulation in the markets. And here we're really close to all-time highs right now. I do think that by the time we open on next weekly candle, or I think within sometime next week, we should probably take out all-time highs and make new highs. And so with SMT, if there is SMT, then you have to treat it as a possible reversal. If there is no SMT, then it's higher possibilities, there's higher chances of a continuation. Alright, so that's pretty much all of the pros and cons. I think one last thing I do want to mention here is being patient and not really forcing anything to happen. I think that's one of the most important things that I have to kind of watch for, is to not force any setups, right? There are going to be times where it feels like I have to press a button, but that's not ideal. So just being patient, understanding that there's going to be days and days, like the market's not going to stop unless something crazy happens. But yeah, just be patient here. Improvements, essentially a recap over the pros and cons, being consistent, requiring a higher time frame objective, a model, and an entry pattern. Second, paying close attention to SMT. Know when there's SMT between ES and NQ, and you'll have to use SMT, or it's ideal to use SMT before and during a setup. For example, if you're in an execution and you're targeting NQ's high, right? But if you're watching closely between the relationship of NQ and ES, you might notice that ES has already taken out its target high. And if ES does so, you have to move your stops to break even or consider closing the trade, because if ES has taken out its respective high and NQ did not, the fact that NQ did not take out the high yet means that there's SMT. If there's SMT, you don't want to be part of any manipulation. And third, like I said, just be patient. I don't want to force anything. I don't want to force anything to happen. And yeah, so that's gonna wrap it up for the pros and cons for me for this morning session coming into this week. And yeah, we still have about like 7 minutes and 18 seconds left for the 4-hour candle to close. Just being patient, waiting for those candles to close. And I think maybe I can squeeze in one game of chess before we do so. Oh, you're in my... Am I allowed to do this here? I think he's just gonna do this. Oh my gosh. If he takes... Okay, he's... Okay, I go here, maybe he goes here. Here? No, he's not gonna go there. Oh, his knight is trapped. His bishop's getting attacked. All sorts of stuff is happening now. Okay. He has no spots for his knight. Oh. I think I just have to watch for backmate or back rank. Probably go here just to watch for the back rank. Yeah. All good there. I like this. I mean, this bishop's holding everything together here. Everything is like glue right now. Oh, and he lost. There's the closure. It looks like we might make a new high here. Very interesting. So we just made a new high whenever we did open up. We've taken out the 4-hour high. And we also took out the 8-hour high. Interesting. Well, actually, I mean, if you take a look at the 8-hour candle, it's to be assumed that we should take out the 8-hour high. Same thing here on the 4-hour time frame as well. Yeah, as soon as we opened up here at 10 o'clock, expansion higher. Alright, well, I think that's pretty much going to be all here for me for today. I think we have already completed the morning objective for me. 4-hour candles already been completed. 8-hour candles has also been completed. Coming into the rest of the morning, coming into the afternoon, pivot. I'm going to pivot from the 4-hour time frame and the 8-hour time frame onto the 15-minute, onto the hourly time frame. Also, once the 6-hour candle closes, that's going to give me a new objective, right? Are we going to close bullish on the 6-hour candle? If we do so, then I could use that idea or that information to target the 6-hour high. If we close bearish on the 6-hour time frame, then I would be targeting the 6-hour low. And yeah, I think that's going to be